Okay, we should be live. Just going to give me a minute. Okay, we're live. Amazing. And the audio should be working. And one of the things I think I've been doing wrong is holding the mic right. So hopefully I'm getting the mic right this time. Please let me know in the comment section if you are hearing me all right. Right. We've got a few exciting things to talk about. Let me put that whack on. Live stream 20. When will this go moon or bust? It's been a frustrating week of little to no new information, despite various things being promised to us on the 17th. As we've discussed on the Discord, it doesn't seem like Cineworld are under any pressure to meet the deadlines that are set on the Chapter 11 filings. Without further ado, so, by the way, if you're new to this is a live stream set up weekly to discuss all the information that could be coming out about Cineworld's Chapter 11 bankruptcy filings, where I also have a glass of whiskey while we do it on a Thursday. And also, the reason we're talking about this is because Cineworld have more debt than a student on graduation day. And so we need to understand how Cineworld are going to deal with this debt. Cineworld have gone into Chapter 11 filings. Some would argue time will tell for responsible reasons to try and sort this out, and it could potentially be a very good thing for shareholders, and it could potentially be a very bad thing. So us existing shareholders, I think it's a great thing to meet weekly, discuss the news, even in weeks where it doesn't seem like there's very much news. There's always things to discuss, and we can talk about whether we feel as though we should be buying more. I'm excited for the opportunity, the point at which I can purchase more shares. Just going to have a quick look. A glass of whiskey. We've got the audio working, it looks like. I'm actually, one of the main reasons I think it's great to be following the stock weekly is because there will become a turning point where we know that we're going to retain equity, or it seems extremely likely, and we can potentially purchase more shares at that point as our confidence grows. Or if the opposite happens, we can be ahead of the curve and avoid losing all of our money. This stream current bit rate is lower than the recommended bit rate. Okay, so if I'm dropping out, I'm really, really sorry. And if the quality is dropping, I'm really, really sorry. Just let me know in the comment section and I'll try and improve it if I can. Right. This is my Penderyn Welsh whiskey. All right. One sip and then back into the live stream. Okie dokie. So one of the things I've set up, a few things that I've done. One thing is I spoke to ChatGPT about Cineworld, and so I'll read out what ChatGPT told me. Another thing is I built a dividend yield calculator. So we've got that here. And I've put a link to this dividend yield calculator in the comment section. In the description. So you can go to this dividend yield calculator. Anyone can view it. And what you'll be able to see, if I zoom out, I built it on a very big screen. So actually, I'll probably zoom in. What you can see is how much dilution what dilution would affect the 2019 dividend. So the 2019 dividend was actually higher than 500 million, and much higher. But the dilution, you can see here, 10%, 20%, and it goes all the way up to, it starts going up in 50s, all the way up to 1,000%. You can see what that would have done to the dividend. So if we had 1,000% dilution, the dividend would go down to 4p per share. And so essentially, if you're buying a share at 50p per share, the 2019 dividend would be 7.19%. And so that's the dividend calculator I built. And you can see in these two charts, if you manage to get your average at 3p, some people potentially bought in at 1.8p, and there's no dilution, well, then you would have, so no dilution and having your shares at 3p, you would have 1,318% dividend yield if you got back to a 2019 dividend. So that's what quite a few of us are waiting for. We are waiting for the first dividend payment. Now, I think that being optimistic, the next dividend won't be till 2024. and it could be much later than that. Well, and as we know, dividends, there are no obligation to pay a dividend. It's just because a company has paid a dividend in the past doesn't mean it will do again in the future. One of the things that those of us following Cineworld particularly like is the fact that Mookie, the CEO on the board of directors, owns a 20% stake. So he's the one with the incentive to actually issue dividends again in the future. And that's why I'm confident if we retain equity, we will be getting them again in the future. By the way, guys, I answer every single comment that gets asked in these live streams. And so if you leave a comment in the live stream chat or even in the video below, if you're watching this back later, I will get around to answering it. I have no unanswered questions on my channel whatsoever. Right. So the cool thing, let me just talk you through this a little bit. This Cineworld dividend yield calculator. You can see if your average was at 10p, 20p, 50p. And what I'm thinking about trying to build is a way for you to copy and paste this. So you can copy and paste this, but building one that you can copy and paste, and you can put in your average, and then you can put in the amount of shares you have. And so if there is a 2019 dividend again, you can then see how much you would get of that dividend with different amounts of dilution. Now, one of the things to note, because of what we talked about in last week's live stream, is that dilution doesn't just have to be dilution of shares. So what it could mean is that we retain equity, but we lose something like Regal. That would still kind of fit under what dilution is. And I've actually built, most of you I think will have seen it. I made a 3-part series based on a Regal IPO rumor that I talked about in last week's live stream. And I'm just going to go to the video just to see. Doesn't look like there are any questions yet, so I'm just going to keep plowing on with the video. So the next thing is, when will this stock move? This is a question that I asked ChatGPT. So I think I'm going to go into the questions I asked ChatGPT. And also, so those of you that don't know, Microsoft have released this incredible new software called ChatGPT. It's an AI that lets you can ask it any sort of questions. You can write text, you can write, and it just sort of generates text in an incredible way. It's just an ingenious AI. And so I've been asking it questions about Cineworld today. The first thing I asked it was to give me 3 likely outcomes for Cineworld shareholders now that Cineworld has filed for Chapter 11 bankruptcy. The first thing it said was shareholders may see significant decrease in the value of their shares as bankruptcy may lead to decline in the company's financial stability and future prospects. Shareholders may not receive any returns on their investments as the company assets may be used to pay off creditors and other debts during the bankruptcy process. Shareholders may have an opportunity to participate in the reorganization of the company, but the outcome of the process is uncertain and will depend on the specific details of the bankruptcy case. So a lot of people, when I tell them about ChatGPT, get really freaked out and scared. Is it going to replace all of us? And yeah, I've been using it. I think it's absolutely brilliant. What a great tool. But yeah, it's just a tool. As you can tell from that answer, there's no valuable information that we didn't already know. And then, so the next thing that I asked it was, in the case of Cineworld specifically, are shareholders likely to retain equity? And it gave me the same sort of legally answer. It was quite interesting. In the case of Cineworld specifically, it's uncertain if shareholders will retain equity in the company following its bankruptcy filing. It would depend on the outcome of the bankruptcy process and the specific terms of the reorganization plan. It's possible that shareholders may be offered new equity in the reorganization of the company, but no guarantee, blah, blah, blah. The next question I asked it is, what date are we likely to, this is interesting, what date are we likely to know the final outcome of the Chapter 11 filings and why? So the final outcome of Chapter 11 bankruptcy filings can take several months or even years. So this is something I thought was interesting. What this does is it scrapes the internet, all of the internet up until 2021. So this AI doesn't know any more data further back than 2021. And I thought it would come out with some of the dates from the legal proceedings because it would have read all of that in just a matter of seconds. But actually, it's saying, and it knows more than we do, this AI. It knows more than any one person could. It's saying that it can take several months to be determined. And this is a AI that has an understanding of the legal process from the internet, which, that's all I'm getting information from. The specific timeline of Cineworld's Chapter 11 filings will be dependent on the specific details of the case and the court schedule. This is where it gets more specific, though. The court will first approve a disclosure statement. That's the thing that we were meant to get on January 17th, and we haven't had yet. And a plan of reorganization. So this is what we are waiting for. This is what will actually lead to the share price to moving. Cineworld have been moving on this quite quickly with their leases. And what we've been talking about on the Discord is actually with the way that Cineworld has been quite ruthless, dropping 60 leases in the last week, it does indicate that Cineworld are trying to reorganize in a way that gets them out of Chapter 11 bankruptcy intact, like they've spoken about couple of times. And that would be absolutely remarkable if that is the case, right? If we are getting out of Chapter 11 bankruptcy intact, some of these higher end statistics are quite possible. So having, imagine if there's 50% dilution, that would mean this statistic here, this is 1.2 billion shares. And so, which is incredible to delve out 500 million among 1.2 billion shares. But yeah, so what you can see is the 50%. Let's go to 100% actually. So if we scroll along here to 100%, you'd be getting, if you manage to buy at 3p, you'd be getting a 659% dividend. And then 10p, 198% dividend. If you bought at 50p, obviously a 20p dividend would be 40% yield. So there's no question the value of this stock is crazy if all we see is significant dilution. I mean, the fact that you'd get a 7% dividend yield if it's 1000% dilution is mental. I don't really understand this share price because it's kind of implying that Cineworld is definitely going to go bankrupt, but as we've seen in the last week, the way they're operating, they are wiping leases off the balance sheet. Now, one of the pessimistic perspectives on wiping leases off the balance sheet is this idea that they could potentially be trying to make it look like their revenue is high, but their capital expenditure is low. And by doing that, it means that you could sell the company for more. And that could be something that the creditors are forcing the Cineworld, the debtors, to do. But I think it indicates more of a sort of an aggressive approach by the board of directors to try and sort of get the business back to a point where it free cash flows. And I honestly don't think it's that much of a challenge to get the business to a point where it's free cash flowing, especially with what we're seeing in the box office at the minute. Someone on the Discord mentioned that someone who worked at Cineworld, thank you so much for coming on the Discord and sharing your opinion, but someone on the Discord talked about how family films are such a big revenue driver for Cineworld. One, because a lot of the box office money stays with the cinema, but then also the family buy popcorn and cokes and all sorts of things like that. And that's one of the things that we've been missing over the last 2 years. So yeah, that is one of the enormous things that we've been missing over the last couple of years is sort of family films. One of the crazy things that has been happening in the last week that hasn't been talked about that much. If you go to Box Office Mojo, what you see here is you've got Avatar making 32 million on the box office weekend. But what honestly, I've been following this stock for 2 years. We've not had a weekend where Avatar's making 32 million and the second film is making 18 million and the third film is making 14 million. And then the fourth film, there's a fucking fourth film in the tens of millions making 12 million, and then the fifth film making 10 million. This has not happened in a long time. And what it indicates is that we aren't just relying on the people that are willing to go see a Marvel film, which is an enormous audience, and Cineworld has managed to rake in lots of cash from Marvel films. But I was speaking to someone at my fitness group the other day, and they came up to me and said, "Oh, I've been to the cinema last weekend. Really enjoyed it. Really enjoyed the film I saw." I was like, "Oh, what did you see?" Expecting them to say Avatar. Me thinking, stupidly, that's the only film that people could want to see. And then they came back and said, "No, I saw A Man Called Otto." And I was like, it just clicked in my head that the Avatar audience is one audience, and other audiences have been starved for big films for a really long time, and now you've got a really good balance. Look at that list, that balance, that very different audiences. You've got Avatar, people that are interested in fantasy. You've got Megan, people are interested in horror. You've got Puss in Boots, which is just a family film that is getting really high reviews. And then you've got A Man Called Otto, which is your more sort of Oscar-worthy, acclaimed film, feel good. All of them appeal to really broad audiences, but they are also all masters of their niches. So yeah, this is why we're seeing a particularly high box office weekend across several films and across a broader audience of people. And then Plane, saw the trailer for that. I mean, Plane looks like a really average film, and I can't believe it's making 10 million. So we are seeing cinema coming back to full force. And I think people sort of, forget that actually we don't just need blockbuster films. We need a broad spread of different appetites to pull different audiences in. So it's really exciting to see that we are getting that appetite for cinema back. And we are also going to be seeing Ant-Man in not too long as well. So I'd be really interested to see, which will be setting up the sort of next big villain, Kang, and then also apparently Kang will be defeated by Doom, and then Doom will be the next villain, which would be a really cool second act of Marvel films. Right, I've got a question in the comment section from AJ. When do you think we will get the business plan? I wish I could tell you. ChatGPT doesn't have an answer, and so I will. My guess will not be as good as ChatGPT, but we saw 60 leases. Let's just do a quick calculation. We saw in the latest K-roll filings. I should have quick links to these, but so in the latest K-roll filings, we saw how many lease agreements were left to be arranged. So we got the January 4th hearing presentation. That's the one. And so I'll just open that up. And I remember what page it was on, don't I? Yes, there it is. And so we have 478 sites. There are now 60 less sites to sort out on that list. 60 sites have been dropped. And I believe these are just Regal sites. Let me just zoom in. Other includes fees. This is all just Regal. So don't worry about 60 sites seeming like a large portion of those sites. This is just Regal. And also, declining a site means that the landlord can still come back and say to Cineworld, look, I'm sorry, yes, we can lower the prices. But it just really shows them that they are willing to cut these people loose. And that must put fear into the other lease agreements that they have. I mean, who are they going to find other than Regal, aka Cineworld, to lease these properties? So they have very little leverage, these people. Cineworld are really the only business that's going to give them the money that they are currently getting. So yeah, negotiations underway. That's now 60 less. They had 103 sites with savings to date. And then I don't know what the grey area is. That's other. Okay, so that might be properties that they just own and don't have lease agreements with, or something like that. Who knows? So there's 60 is by no means, that's just a significant chunks of sites that have now sorted out on this list. So 478 minus 60. Let me just try and divide it by 60, sorry. is 7.9, and they've done that in like, let's say 2 weeks. So 7.9 times 2, 14 weeks. 14 weeks divided by, let's say 15 weeks divided by 4 is, so at this rate, we'll be looking at around 3 to 4 months, which I know my earlier prediction was Jan-Feb, but after speaking with ChatGPT, who says that these things can go on for months, if not years, I don't see why Cineworld wouldn't try and drag this out, because it means that they can get way better lease agreements. It means that they can put Cineplex in a really tough position, and it means that they have, I think the longer this goes out, the higher the chance that we, the shareholders, walk away with equity. And the longer it drags out, the more equity we will retain. So as much as we want news, I don't think we should be wishing this to go ahead quickly. I think it's a very good thing that this is being dragged out, because it means that all the while that's happening, Cineworld are actually generating far more free cash flow and are getting way better deals on their lease agreements and all other agreements. It's not just leases. You could easily get distracted by one statistic, but they also have to deal with the advertising people, all sorts of people that they haven't been able to apply real tough negotiations with for a long time. They now have the ability to do all of that. So I think we don't want Cineworld to be rushing this process. Yeah. Okay, there's more questions in the comments, so I'm going to be answering those. Bruce the Goose, evening. Hey. Sam, evening. Hope you're enjoying the whiskey. I am very much. Penderin is my absolute favourite. I've been having Grant's whiskey for a little while just to get it down. Are you currently averaging down or just holding? Right now, I'm just holding. I had average down. I bought at 20p in the pandemic. Then I was buying all the way up to 120p. Then I was buying all the way down. I got my average down to around 30p, and I'm like, that's good. I don't need to risk any more money. I actually did a video talking about how much I invested in Cineworld. It might be time to do a refresh on that, because I've got a guy that's making these YouTube videos into clips, and that would probably be a good clip to have. So yeah, currently averaging down. I'm currently holding. But what I will be doing is, the second I get positive information, every time that the likelihood that my equity won't go to zero, then I am averaging just a little bit more. You can actually see my position on eToro. You can see the portion of my portfolio. So if you go to eToro and look at my account, you can actually see what position, how much of my portfolio Cineworld makes up. Some people have had issues buying Cineworld on eToro, but I've never had any issues doing that. Spreads are quite high, but they're quite high everywhere, just because people do not want to sell this stock for the same price that they are willing to buy it. So that's not actually something to do with eToro. That's not how eToro makes their money. How eToro makes their money is actually different, and I could do a whole video on that. My average is 5p, but I keep buying small amounts incrementally. I'm around 350 region, anticipating shorts, trying to get this back down to 2p again with no news. So yeah, Cineworld is, if you take the amount I invested into it, I've done a video on this, as I said, it's around 20%, but where my position is currently, it's around like 5% of my portfolio, I think. So yeah, this is where it gets complicated with doing recommendations or trying, you really have to work out what's right for you. Because if you've got absolutely no money in Cineworld, then I think it's worth putting some money into it. Maybe, just 1% or something like that. It all depends on the size of your portfolio and how much you're willing to risk. And also, I think it really depends on how much you like Cineworld and how much you like cinema. So I'm a Cineworld lover and I'm a cinema lover, and I like their being, I think Cineworld manage their business really well. I don't think it's the best place to see films sometimes, and I like indie cinemas and stuff like that. I like cinema as a whole, but I think Cineworld perform a valuable part in the cinema ecosystem, and I want to see the current existing management stay in control. So there's value there for me in investing in Cineworld. Surely the judge won't allow this to go on much longer. I don't think the judge will allow it to drag out, But at the same time, the judge will, so long as he is seeing progress being made, he won't force it to end. He won't just sort of slap some sort of hard deadline on for no reason. Cineworld, certainly you can see that they have massively ramped up the speed at which they're dealing with lease agreements, and the fact that they've cancelled 60 really shows that they are willing to be ruthless in their negotiations. So I think the judge will see that as a positive thing. He just wants to see fast movement, but that does not mean that the whole proceedings will be fast. I also think 3 to 4 months, if it was to take that long, would not be the end of the world. It would be a painful 3 to 4 months for us, for sure. But I think in the grand scheme of things, for people like bankruptcy judges, that's not a very long process at all. Surely the judge won't allow... so the average length of a Chapter 11 bankruptcy case can last is 17 months. That's a really interesting point. AJ, thank you for bringing that up. So the average length a bankruptcy case goes is 17 months. This started in September. So that would mean that it's 5 months from September in 2024 that this would end. But so I personally don't see it going on that long, but who knows? The thing is, Cineworld can't just pay off their interest payments and then get out of Chapter 11 bankruptcy. They have to show that they are a stable business. So there's potentially a point at which all their debt is paid, all their interest payments are paid, and they're paying their interest payments, but they're still debtors in possession. They're still in Chapter 11 filings. That's potentially what could happen. In that point, the share price could balloon, purely on the basis that everyone knows that there's going to be no more dilution, but they're still in Chapter 11 filings because they need to wait until things like final details like a settlement with Cineplex and making sure that there no sort of dips in the slate is going to affect Cineworld's ability to pay its interest payments. They certainly wouldn't want to be going back into Chapter 11 filings several months after exiting. Debtors have the option to submit a request with the court to file an additional extension of up to 18 months from the petition date, prolonging the time needed to formulate and submit mandatory plan of reorganization. Great information, AJ. Thank you very much for sharing. One of the interesting things that we didn't get to discuss last week on the stream was about how what was I just about to say? That interesting IPO rumor about Regal, potentially IPOing Regal, was that they mentioned Investor Tech, I think is the right one. And Investor Tech was also, that was one of the interesting details that I just didn't go into in my little videos, was that Investor Tech was the company that originally did the acquisition of Regal, I believe is what you said. It's just another reason that particular IPO thing was quite interesting. I don't think we can dismiss it, but also at the same time, I think most of us believe that Cineworld will remain intact. They won't be selling off any individual part of the business. Right. So, what was the next thing I wanted to talk about? I need another sip of whiskey. By the way, remember questions. I will answer them. We have not got long left on the live stream, guys. I have a steak waiting for me that I'm excited to eat. Also, by the way, one of the reasons that I really hope Cineplex get absolutely nothing is because Cineplex seem like a really, I want to swear, shitty business. What I was learning about this week, again, someone shared it in the Discord, link to the Discord in the description. But this video, they go on to about it. The smaller cinemas in Canada are signing a petition against Cineplex, and basically what they're saying is Cineplex create agreements with basically all big films that they are going to have exclusive rights to the films and no other cinema can watch them. And to the point in these agreements, right, because when these big films sign up with Cineplex, and this is how it's weird because I don't know how they get away with it. These big films sign up with Cineplex, which is by far the largest cinema in Canada. And they say, well, you got to at least play it X amount of times in each of your regions. And so Cineplex go, yeah, sure. And they play them at bizarre hours of the day just so other cinema chains cannot play those films. So they'll play it at like sort of 1 in the afternoon, an adult film that a family wouldn't want to go see on a Monday, just so that another smaller cinema can't acquire the rights to play that film at 7 o'clock on a Saturday. And it's just incredibly crap behavior. I can't believe that. Really, the thing that I can't believe is studios would be willing to do that with Cineplex. But I guess Cineplex basically have enormous leverage when they can say, you're not going to get by far the largest cinema in Canada unless you sign exclusively with us. I just think that studios should be tougher on their negotiations. So, because I think they would make a lot more money if they are in more cinemas across Canada. And it's potentially something that I could have seen Cineworld doing, is being a little bit more competitive. But who knows? Maybe that's giving Cineworld a bit too much credit. They are a hyper-capitalist company that are acquiring big businesses and growing at faster pace as they can. They potentially would do that if they had such a stranglehold on their market. I wonder what they would have done with Cineplex, but Cineplex certainly seemed like a crappy company, so I really hope they get nothing. That's always just one of the weird aspects of this whole case. Someone posted a theory in the Discord that Cineplex had to file as a debtor, as a debtee to Cineworld on the 14th, and if they didn't, that they wouldn't get any money. I was a bit skeptical of that. I was very hopeful. I was excited if it were true, but I was a bit skeptical, and I haven't heard anything about that. So, minions, if you could go out into the world and find out if the Cineplex now aren't owed any money by Cineworld. That seems extremely unlikely, because I don't believe that they did file as a debtor to Cineworld. So we'll see, though. Sorry, as a creditor to Cineworld. What are the chances share price will go up? Well, so I see someone comment every time the share price moves by 10%, which is like a movement in the price of like 1 to 10 million. Like, actually, yeah, so 10 million would be, which is just not massive amounts of money for a company on the market. Cineworld have to keep on filing with the London Stock Exchange just to be allowed to be traded, because they are smaller than what is legally allowed to be traded on a public exchange. So this is one of the things that you might get if you are signed up to the email list, is this thing that Cineworld saying, please let us continue trading on your exchange, even though our market capitalization is too small to be traded on your exchange. And so, yeah, if you see a movement by 10%, I would just ignore it, because it's not really an indication that anything significant on the stock has happened. I think we will see the share price go up when we know that what equity shareholders are likely to retain. Potentially when all the lease agreements with Regal are settled, then we could see the share price go up. If we see an indication that Cineworld have paid off all of its interest payments and have a growing cash supply after doing that, then we could see the share price going up, which we didn't see on the Jan 4th presentation. But we are in a very different situation now than we were on January 4th. Is it likely that Cin will be sold or go bust? Well, of course, I would say that it's possible, because they are in so much debt, and it's possible. That's the reason this channel is moon or bust. It really does feel like it's one or two of it's one of those things. There is the chance of the significant dilution thing. So it's possible. That's why I wouldn't put all your eggs in this basket. I would think, like, put maybe something in it, like if that's you're inclined to do for the reason I mentioned earlier. But then if you see if if you're following with us, and even if the share price doubles or triples, if we get an indication that we are going to retain equity and have dilution anything lower than 1,000%, I will put more money in, is basically how I see it. How much money did they make from the 3 released movies? Oh, so they made 45 million. So Avatar made, let me go back to the box office mojo. Here, if this is what you're talking about, these 3 releases, they made 45 million. So they made more than Avatar The Way of Water. So you can see there that without Avatar The Way of Water, they'd have about half the revenue. But also without those 3 films, they'd be 60% of the revenue would be gone. And that's why you need these smaller films. They all get separate marketing budgets. They appeal to different audiences, and it just means that you're getting different people in the cinema, which means a higher likelihood of people buying popcorn and Coke and stuff like that. Back when we had Top Gun Maverick come out, we had a crap slate of films surrounding it. So this is why it's really cool to have Avatar, cool film. So yeah, they made about 45 million. So without them, we would have lost over half the revenue, which is how cinema has been operating over the last few years. Right, guys, I think that's all from me. I'm just going to check no more comments. It's been a great live stream. I think the audio's worked the entire time. Oh, no more comments. So I'm going to finish up there. Thank you very much for joining me. Hope you have a lovely weekend. 1 day left of the week. One last question. What is your prediction for the earnings call for 2022? I don't think it was a bad year. My prediction is at least $3 billion. It's not going to be the revenue is not going to be $3 billion, I'm afraid.